Slide. In terms of household consumption, also China has to rebalance its model of economic growth. As it was mentioned before, it's mostly focused on investment and also on exports. Today, the Chinese government is pushing for developing consumption, domestic consumption. They have increased wages. That creates additional problem in terms of competitivity of the Chinese corporates. I try to fasten a little bit because I understand I'm a bit late, so we switch to the next slide. A few words on the payment we have been conducting at Coface level since 2003, annual survey on payment behaviors in China. And so this year the findings are quite interesting. Last year the major worries of Chinese companies was the end of the help from the Chinese governments in terms of stimulus package. This year the major concern for the Chinese companies is the tighter monetary policy and the access to credit. Banks are really tightening the belt, and the companies have more difficulties, so they have to get some financing from external through other ways on the parallel markets, which is very risky because they have to pay very high interest rates, and we see many corporate failures coming from that reason. Then after, there are other concerns like the increase of the commodity prices, inflation, more and more domestic consumption because the market is slowing down in Europe and US, so they have to be more aggressive on the domestic market. They have to fight on margins, and eventually that might create more, lead to more corporate failures in China as well. Okay, maybe you can switch to the next slide. Next slide is about India. I will probably say very quickly. On India, our view is not so, I would say, positive in the sense that we've seen recently there's an economic slowdown of the economic growth, 5.3% the last quarter, compared to more than 9% 1 year ago. So clearly a real slowdown of the economy. We see some bottlenecks, infrastructures, distribution, networks, etc. The business climate also is not so keen, so positive for foreign direct investments, especially in sectors like mining, manufacturing, services, distribution. Inflation reduced but remains high. Public debt is high. Fiscal deficit is high. And so the slowdown of the economy will definitely affect the business profitability in India. Next slide. Next slide is our view on Southeast Asia. So it varies according to the countries. You have so many countries in Southeast Asia that you cannot have only one picture. The countries that are very export-oriented, like Singapore. I was a bit surprised, by the way, that today we didn't speak that much about Singapore, so I'll say a few words on them. Singapore, Hong Kong are very dependent on exports, so for sure slowdown in Europe and US will strongly affect these two countries. These two economies, sorry, I should say. While countries that are stronger domestic markets might be able to resist to the crisis. Singapore, we expect a slowdown of the growth to reach about 1 to 3% in 2012, compared to 5% at the end of 2011. But again, if the situation got worse, we've seen in 2008, 2009, the government will definitely support the companies, will definitely support the system. They have enough, the room is large enough, I would say, to support the Singapore economies. Malaysia, we are still doing not too bad, but for sure the fact that export is an important parameter of their growth, they might be hit also by a recession worldwide. Thailand, they suffered a lot last year because of the floods. So this year, the government is helping a lot, and the economy should, because of that, I would say, enjoy a stronger growth this year, especially in industries like, for instance, construction, where you see a public investment, infrastructure that should help the economy to recover. Next slide, please. Indonesia is also very resilient. I was interested by what was said on the banks, on the corporates. I have a little different view on banks and at least on corporates, about a balance sheet situation, for instance. For me, the major issue with Indonesia is probably the transparency. The growth is there for sure, but the access to information and also the reliability of the information is not necessarily there. So for investors and for credit insurers, that creates problem. Last is about the sectors. We have also some concern of construction, especially in Vietnam, India, and Australia. Next slide. And I'll try to finish here because we are very short of time. The last two, sorry, this one, yeah, thank you. It's about emerging Asia. So you see that we have not downgraded any countries recently. On the contrary, there's been an improvement, and many countries are rated in category A, A1, A2, A3, which is very good. The main difference, I would say, is in terms of business climate. So different countries have different level of transparency, and that's probably where one of the major risks in the future for investor exporters relies. So I will stop here, and thank you very much.